So today we're covering another strong player in the eVTOL market, and that is none other than Joby Aviation. Joby, founded in 2009 with a strong management team, great plans, designs, and a business that is racing towards revenue, offers a lot. So as we covered Archer just recently, we know there's been ups and downs to this cycle. But these are innovative companies. These are new age companies. These are disruptors of technology, which also means they are volatile. However, if you're going to place a bet on the future and you think that this space has a place for you, now's the time to get involved and take a quicker, closer look at this while the opportunity is here. Founded in 2009, this company went IPO in 2021. And via a SPAC, as did Archer. Lots going on here. So again, we're talking about air taxis. We're talking about electric vertical takeoff and lift operations. Joby also is another interesting company that it also has ties into the U.S. Air Force, where they've delivered their second prototype plane for testing. Joby has a lot of deep ties as well. We're talking Delta Airlines, we're talking Uber, NASA, and Toyota. And Toyota has supplied quite a bit of cash. And Joby, what does Joby get out of that? They get huge funding from that, as Toyota just committed another round of $500 million to be supplied in a couple of different tranches. This is huge, a huge event for Joby. Kind of like Archer has Stellantis backing them, Joby's got Toyota. And with that, they get not only the money, but they get manufacturing expertise, which Toyota brings to the table. So very interesting, very exciting. The other interesting thing is not only do they work with the Air Force, but they also have not just an electric, but they have a kind of a hydrogen hybrid plane as well that they're working with. So this whole space is very innovative, and there's lots of things happening. So watch out. If you blink, you might miss a step along the way here. Joby is also indicating that they are making fantastic progress, record progress in their own terms with the FAA. And in their fourth quarter alone, they indicate that they raised over $1 billion in additional funding. So these are companies, just like with Archer Aviation, Joby doesn't seem to have a problem in raising cash and getting committed partners in the process. Insiders own about 32% of this, and Toyota, with its large investment already and more to come, is in excess of a 20% ownership. So you're in pretty good hands here as well. Delta, Uber, NASA, Toyota are huge organizations to collaborate with, and with entities in the Middle East that are chomping at the bit to get the product and go forward. This appears to be an opportune time with a plunge in the stock price. Doesn't seem to have changed the fundamentals too dramatically. But let's take a look. Joby Aviation, what are their fundamentals? Well, this company that is racing to become a full manufactured scaler to produce 500 airplanes in Ohio on an annual basis, boasts a market cap of just under $5 billion at $4.95 billion as of right now. That's at a stock price of approximately $6.30 a share. Now contrast that with Archer, which has a market cap of about $4.5 billion. These two companies appear to be neck and neck. This is an interesting phenomena here. Is there's a bit of a separation of the pack and those that are racing for acceptance and approval into this space. Joby's trading range has been about $4.50 a share all the way up to $10.72 a share. So this year to date activity thus far, it's down over 20%. And last year was up over 20%. The 5-year still down 42% and up a bit from the IPO date in 2021. So this is not an inexpensive company. These are volatile disruptor technologies, and it's still really no provable revenue, just like with Archer. However, lots of partners are lining up to work with Joby, as they were with Archer as well, with revenue expected to tip in late 2025 or early 2026. You're talking about having a pilot and 4 passengers on their taxi system here. This creates another fantastic opportunity, is that there's a little bit of a lull before the excitement storm, because once these companies start shipping and we see these products in use, things can really ramp up quickly for a global rollout all around. Analysts are targeting this at about $8 to $10 a share, a little bit higher than where we're at now, but these seem to be very conservative estimates, as there's a waiting game and a wonder, will the revenue really hit, and what's that going to look like, and how long will it take to have a global rollout and ramp up. Innovative companies like Joby and Archer, of course, find a way to get around those issues and grow much faster than analysts typically predict. If you're willing to take a bet on the future, and if you liked Archer Aviation, you're also going to like Joby. I think there's plenty of room in here for both players. Joby also has the defense capabilities, working closely with the U.S. Air Force. I wouldn't be surprised if they have another collaborative effort come out in the coming weeks or months with a defense contractor to move some things along a little bit quicker there as well. FAA is good news. Production and manufacturing looks ready to roll. And with additional funding from Toyota and manufacturing expertise right here for them, a lot of things are lining up for this company with that disruptor technology, the innovation, and the bet on the future. This is one company, if you can stand a little volatility, you might want to buy some and tuck it away and watch and see what happens, see what develops. Let me know what you're doing below. I'm wading in little by little on Joby, just as I started with Archer just a couple of weeks ago. These are stakes that will grow and grow. And as we watch things, we'll see where they go. Have a great day. Let me know what you're doing below.